This is Peter Milios from the Finance News Network. Stocks advanced last night as investors continued building on the New Year's early rally while awaiting economic data and corporate earnings coming later in the week. The Dow Jones Industrial Average gained 0.56%, the S&P 500 traded up 0.7%, the Nasdaq Composite led indexes for another day, adding 1%. The Nasdaq has rallied in recent days as optimism over cooling inflation pushed investors to beaten up technology stocks. Sectors were mostly mixed and fairly bunched in Tuesday's trading, with communication services and consumer discretionary leading the pack, up 1.3% and 1.26% respectively, whilst consumer staples was the worst performer, closing 0.16% lower. There were some positive takeaways from retail and consumer updates. Fan mags and semis extended their recent gains. Travel and leisure also rallied despite some cautious commentary on cruise lines. The commodity space was mixed, with metals and mining stronger, but AG and commodity chemicals trailed, while energy rallied in the afternoon, reversing earlier gains. Billionaire investor Paul Tudor Jones was optimistic on the stock market overnight, saying the Federal Reserve likely would not break the economy, halting rate hikes before it does so. Jones, who noted he wasn't making a specific forecast, said there was a huge demand for stocks on the way this year due to share repurchases and mergers. You've probably got something just under $1 trillion of excess demand in the US stocks, Jones said Tuesday. Where is this selling going to come to offset that demand coming from buybacks, from the corporate line items, from some combination of buybacks and M&A? That's a significant amount. Everything being the same, the stock market would be up 7% or 8% this year. Oil markets have been relatively calm of late, compared with the wild ride through much of 2022. Prices have been volatile, but have stayed mostly at about $80 a barrel for the past couple months, with few seeing the calm lasting. Wall Street's top analysts see the makings of another price leap lurking in just about every important corner of the oil market. A run past $100 a barrel is likely in the coming months, they say, which would threaten a weak global economy and put energy prices back at the top of the agenda of many governments. In other news, China's decision to allow imports of Australian coal after more than 2 years of an unofficial ban will see 3 utilities and a major steel making given permission to resume imports from Australia. There is likely to be some interest among Chinese buyers for cargoes from Australia, but the possibility of a return to prior levels of trade is limited, considering regional and global market dynamics have shifted substantially. In company-specific news, Johnson & Johnson will look for opportunities to merge with or acquire firms that add value to its focus area of eye care, surgical robots, orthopedics, and cardiovascular products, the company's chief executive officer said on Monday. Microsoft is set to invest $10 billion in OpenAI as part of a funding round that would value the company at $29 billion, news site Semaphore reported on Tuesday. Microsoft will reportedly get 75% share of OpenAI's profits until it makes back its money on its investment, after which the company would assume a 49% stake in OpenAI. A bet on ChatGPT could help Microsoft boost its efforts in web search, a market dominated by Google. The SPY futures are pointing to a 30-point rise. Thank you for listening.